The markets got roasted yesterday. We better take a look at the week ahead to see what's coming up for us. I am Dr. Stock, Doctor of Education, and if you guys want to see a really grumpy looking tuber, you should take a look at a scowl-lipped potato. I could not even... Oh man, that was 7 levels of awful, I guess would be a great way to describe that joke. We have SPY, QQQ, IWM. We're going to take a look at those 3 ETFs that track the indices, S&P 500, NASDAQ 100, and Russell 2000. I'm also going to give an update on Nvidia. We got to look at the technicals there. Tesla, Enphase, Moderna, Intel, DraftKings, and Bitcoin. So yesterday, Fed came out and put doubt on the idea of rate cuts, talking about inflation possibly being a little bit worse for a little bit longer than we expected, and putting that doubt onto the market really took the market and shook it pretty hard. I had a pretty green looking portfolio into midday or so in the markets, and then around that 1 o'clock hour, things really turned around. So I went from being up 10% on my options play on Apple to being down 10% and getting stopped out on my options play on Apple. So that's another talk for another video. What do we have coming up for next week? So let me put this up here. What we're looking at for next week, consumer inflation expectations, which historically has not been huge as a catalyst for moving the markets, but I think it is absolutely worth taking a look at, making sure that we see that still sticking around 3% or even lower could be a good thing for us. More Fed speak coming out at 7 o'clock on Monday of next week. Moving ahead to the really important thing on Wednesday, April the 10th, we have CPI inflation numbers coming out at 8:30. With what the Fed just came out and said and what we saw the reaction with the market coming along, this is going to be one of those critical and important times to be watching the market. And I just want to put the comment out there. I've been saying this since about August of last year, that the highest on an unadjusted basis, the peak that we have oftentimes in the early part of the year for CPI on a seasonally unadjusted basis is February, March, and this is April, and we're getting March's numbers. So we saw February, not great for markets. Now we have March's numbers coming out. Probably not going to be great for markets if history repeats itself, that we start to see more of that stickiness stick around and more of those higher numbers stick around. And then on an unadjusted basis, we also tend to soften it going up until we get to June. So April, not bad. May, not bad. June, little spike. July, dip back down. So July is normally a lower point for us on a seasonally unadjusted basis. And then August, September, October is where we start to see that resurgence. And we know that the market typically doesn't do well right around that September timeframe. We got to remember it is an election year, so the market's going to get pretty darn crazy as we start to dip in between Q3 to Q4. So just looking ahead to next week, talking about the inflation numbers coming out that we have. I can make a separate video for CPI as we get close to it. How do I think this is going to treat the markets? I don't think the markets are going to like the approach to the CPI numbers. And if we do happen to climb up to those CPI numbers based off where we're at right now in the charts, that could be understandable. But then when Wednesday comes along, or maybe even to close Tuesday, we start to get a little bit nervous as we position ourselves. And then Wednesday, we're going to see the real impacts coming out from that. So core numbers, hitting 0.3 is not going to be bad for us. We want to see that dropping down lower. 0.2, the market's really going to like that if we beat consensus and forecast what we have for CPI. So please be on the lookout for that. The year-over-year numbers should also not be discounted. We will continue to see those drop. As long as they continue to drop, we should be in decent shape, even if the month-over-month numbers tend to be a little bit higher. Now, just so you know, year-over-year numbers are unadjusted, seasonally speaking, and then seasonal adjustments do affect the month-over-month numbers that we look at. So, little bit of trickery or whatever. I don't know if you want to, whatever you want to call it. I know CPI has been tossed around a couple times there. Let's move on to the charts from this. I just want to mention that PPI numbers we also have coming out Thursday. The next day, we FOMC minutes Wednesday at 2 p.m. That's going to be very, very critical. So put April the 10th on your calendar, by the way, for those minutes. PPI numbers coming out on Thursday, and then we have Michigan consumer sentiment coming out on Friday. So it's going to be a wild week coming up next week, and I think that we're positioned for a decent bounce in the markets. Let's take a look at this, and then from that bounce, I think there's just bouncing this way with that volatility that comes along with it. So this is SPY. We finally solidly broke out of this rising wedge pattern, so it is possible we see further downside. We are still above the 50 and the 200s. We're still in very bullish territory. So what does that mean about my cautious bullishness? Well, it still persists for right now, but this is exactly why I'm being cautious, because we get a little bit of news from the Fed coming out about maybe inflation's not going away. Maybe we're not going to get those rate cuts coming in there. And with that doubt, the market's just very fragile where it's at right now. So the higher we climb, it's like that Jenga tower that we have going on. We just got to be careful that if we climb too high without kind of settling and rebuilding up that tower to be solid once again, we need those occasional corrections to come in and reset it for us so that way we get more stability coming back into it. So looking at QQQ, I said in my video, my last video that I put, I said, watch this support that we have down here. We closed at the 50-day SMA, just above the 50 EMA, which is this yellow line that we have right here. A lot of confluence happening. And we also have a trend line support, which is what this yellow line is, that we keep on finding buyers coming in at that level. So we could possibly bounce from here, have those buyers come back in. 440 has been pretty important to us as an area of support and resistance. We kind of dance around that number in the Qs recently, so keep watching for that. IWM, rising wedge pattern. We're at the bottom of it, though. We could see this thing bounce back. We want to see if we revisit the top of this. That could be that time where, not that we aren't still in bullish because we're above the 50 and the 200, but that could be where we start to see that turnaround happen again. So we do want to see that we continue to put in higher highs and higher lows. And we also want to see what happens if we should break out of this rising wedge pattern like we saw in SPY, like we're seeing in QQQ. We could have further selling come from that, especially if rate cuts start to get pushed down the line, which, mind you, June, as per the CME FedWatch tool, they're still saying that the most likely case is that we do get a rate cut happening in June. That hasn't changed. Even the Fed did come out and put out some skepticism out there. So for Nvidia, I was way zoomed out on Nvidia there. I said 850 was going to be important. We ended up closing just above that yesterday. Our low price was 858.80. We closed at 859.05. So what we have there, these are good technicals that we have going, and it is possible we still draw down to the 50 EMA and SMA. Next week could be the week that we see that happen, possibly the week following. If we don't get what we want to see from those inflation reports, Nvidia, I think, is going to be very well insulated against something like the high inflation numbers that we have now. It still will be sensitive to the market multiples that we get. So as stocks are trading at lower multiples, Nvidia could also trade at a lower multiple, which means lower stock price. But I think that's where the value starts to come in. And I think that people are waiting for that value to come back to Nvidia stock. Not that I don't think there's already value in there. They just want more of it. In a return to this 50-day SMA, EMA that we have right around the 800 mark, I think would be a significant area of support for us, where we have a wonderful bounce off that level. We could bounce from where we're at right now, and in the pre-market hours, we have crept back up a little bit on that one. Tesla, man, Tesla is just getting beat up recently. Made it all the way up to about 177 yesterday, sold off a little bit. We're still in this descending wedge pattern where we still have this confluence down here with a few different trend lines, and we want to see if we end up bouncing off that. I think that if we do get down here, down to around that 155, 153 level, that we have another significant bounce coming off of that one. We still haven't broken this top trend line to get any sort of signal for reversal, and finding fewer rate cuts is not going to help Tesla in the near term. Their delivery news not necessarily helping them in the near term, and I don't think that Tesla is a near-term bullish play, but I do think it's one that I'm going to continue to dollar cost average into and make those options plays as they come along and present themselves in order to build my cash piles on that one. Moving on to Enphase. Enphase, so far, still fighting that golden cross moment. Can you guys see this? We have the 50-day. Let me take down the EMAs for a moment so you can see the SMAs that are on here. So yellow is the 200-day, blue is the 50-day, and man, we just got rejected off the 200-day again yesterday as the market got roasted. I don't think that Enphase is down and out. It is in an interest rate sensitive area, so a good CPI could be something that could be a huge catalyst for the solar stocks, including Enphase. We want to keep an eye on this one with what we have going on with their ascending triangle pattern. This is one that, should we bounce off of here again, find some more support, we could have a lot of upside coming into that. There's another one I'm dollar cost averaging into. One that I don't have a position on right now is Moderna, with a very, very similar looking chart. Still can't catch its golden cross moment, but man, it is close to it. When we look at Moderna, it had a sell-off in its stock price recently as one of its there's a lawsuit against it right now from another company. I can look it up right here what it is for us. Arbutus Biopharma has a favorable court order against Moderna. Not too well read on that one, just mostly paying attention to the technicals, but that is something that totally killed off for the time being, just for the moment, that golden cross moment, maybe possibly still putting in that opportunity into Moderna, as it is one of the big beaten down stocks that we have, and that I think that it's time to rally is still coming for it. So we're going to have to be watchful for that one. A lot of products in their pipeline coming out through 2024, 2025, and so we want to see them hit commercial status. And as they do hit, I do think that we're going to have sunshinier days for Moderna. Moving over to Intel, an important thing about Intel, it came down to its 200-day. We could get a significant bounce for Intel down near this 200-day. We actually started to recover a little bit yesterday before the market sold off. And then take a look at this. Let me make that nice and big on your screen so you can see just how well we sit on support at that 200-day. Also on this trend line that we have right now. And so this is one, we're under the 50, so near-term bearish, longer-term bullish. This is one that could possibly send us up a couple of bucks back to the upside on this one in the near term. If we break support at the 200, 2 candles close under the 200, this thing's going to flip bearish on us, and then we could possibly expect a death cross coming up. So I think Intel is one of those down but not out stocks, and I do think we could see a significant bounce coming off the 200-day. DraftKings, if I can get my mouse to work here, for DraftKings, coming off the bottom of its rising wedge pattern, this is one that could continue up higher. If it doesn't make this top trend line, that's when it could possibly break down through this. So for DraftKings, with what we have for the March Madness, with the Sweet 16 and everything, all that sort of tournament, we have that rise through that. And then I think that we're going to possibly have some softening coming in to their stock price in sometime in the near future. And I was looking at it around $50 per share, $49 to $50 per share, thinking that was going to sell off. It did. Notice that we still caught support in the bottom of this. We're above the 50 and the 200, so that's bullish. But I do think that we're going to have a further correction in DraftKings price, especially if we fail to make it back up to this top trend line before returning down to this bottom trend line. So we're going to have to be watchful for that. I'm going to wrap things up here with Bitcoin. Bitcoin's consolidation pattern happening right now. You can see even with the momentum indicator down here, the RSI, that we're kind of traveling along 50, just barely, mostly in the bullish state. So we're going to have to keep watching for that one too. And I do think that some of the favoritism that we see not only is about that Bitcoin halving that we're running up to, that could possibly see a further pump leading up to that point in time, but I think also some of it is attention not going to the U.S. treasuries, that we see it going to gold, and we see more speculative investment also going to Bitcoin as well, because treasuries are somewhat being avoided. We could see that when we look at things such as TMF, when we look at the 20-year treasury, that we keep on selling off instead, and that would be maybe a sign of lack of faith that the U.S. is going to be able to manage their debt, and that fear, uncertainty, and doubt coming into the bond market certainly isn't anything that's very helpful for them right now. I do think that that we could possibly see a shift coming that sometime soon. I'm going to have to think a little bit more on the TMF thing before I really talk about it a lot more. I do have a position. That position not totally working out very well, but we are sort of at the bottom of that trend line right now of this formation. And so I think now would be the wrong time to cut that loose. I think that we will see a little bit more strength come back to this, especially as we get into next week. So if you guys want to see how I'm playing this market, see what I'm buying and selling, there's a link for the Patreon down in the description. Also down in the description, you'll find a link for a technical analysis trading course. By clicking that and signing up, you get hours of videos, also a learning community that goes along with it, a private Discord that goes along with it, where you can talk with Stockmo, you can talk with me over there at that community. We'd absolutely love to hear from you. Thank you guys for watching. Again, check those links down in the description. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.